dealership, set all that up, paying the What's up, y'all? All right. Take a look. How's it going? How's everybody doing? See what's going on here. Okay, markets run BLU, S&P. Oh, it came at just the right time. Okay, res less than 0. Looks like we did gap down a little bit, traded up, came down. Let me see what those numbers are saying today. Let's pull up all the like our news here. It's like investing. Let's see what that shows. Oops. Oh, it says the music on. Let's go. Okay. Actually. Oh. Get financial juice up there. All right, let's see. Front and center. What's up, guys? All right. I know I look like I just got out of bed, huh? Didn't even get to put on the sexy face today. Didn't even get a chance to come in here. Anyways, how's it going, you guys? Let's take a look. Shikari's talking. Rates falling. Okay, nothing to ECB. It's argued that even after 75 basis point hike, policy would remain expansionary. The members advocated for 50 basis point increase in key ECB rates. 25 was deemed clearly inadequate. Okay. Let's get over here. Let's see some of these numbers come up. Today is Thursday. Jobless claims is kind of my whole philosophy that I was talking about, was that jobless claims are going to look to see if we get this is the number that comes out. Look at my hair. My hair like looks all crazy in the white background. That's so funny. Yeah, I definitely like woke up, crawled out of bed, took care of my car. Okay. The jobless claims going up. That's kind of what I wanted to see to kind of indicate that, you know, the knee-jerk reaction be down, the general reaction be up over the next like week or two, I would think. So let's see if this is a downward day today. Forecast was 13.4, we had 13.6. So it was bigger than the forecast and bigger than it last week. So that's actually one of the things I was thinking we would see. So mean reverting short up. We have resilience is less than 0. So obviously this is going to be resistance. We saw that this morning. This tanked out. We lost this below. And I guess it's good, right? Sometimes luck happens. I could have been in a trade today. I'm pulling down a little bit. UQQ's right down at 280. I'm curious if that's gonna be like a entry point. Should I? Let's see. Whereas the Qs are slightly better with the better looking resilience. I can like change this. I like to see the size price, you know, fills. That's better. But the question is, it's full long up. Do I take it or do I not? Let's take a look at what the VIX is doing really quick. I'll make a decision. If I can grab that, there we go. A little bit smaller this way, that way. With VIX the way that it is, I'm still not in any positional options trades. I usually wait till volatility dies down. I don't like the market to chop around when I'm buying or selling puts and calls. I usually be on the sell side of that, but even now I don't want to be on the sell side of really anything right now. I think the market is going to be directional. It's just gonna be hard to pick which direction it's gonna go. How y'all doing today? Good morning. What's up, Executor fam? What's up? What's up? When you get the RS platform, you don't need to be at 3 hours for the market. Hell yeah. That's what I'm talking about. Music is too loud. Oh, all right. Had the volume turned up. How about now? Is that better? Let me hear my own stream. Let me listen to myself. Let's see. Let's see what Daddy sounds like this morning. Oh, we are on a monthly hedge break on VIX. Thank God I'm not in any kind of trade right now. Okay. Let's see what I sound like. Let's see what I sound like. My voice is super duper bassy also. I don't know if I like that. My voice is super duper bassy also. I don't know if I like that. My voice is super duper bassy also. I don't know if I like that. Check, check. Check, check. Check, check. Oh, it's going to repeat because it's looping my system sound. Okay, let's do this. Comp. Looping my system sound. Okay, let's do this. Comp. Looping my system sound. Okay, let's do this. Quiet. Oh wait, I'm not gonna be able to hear it here. Yeah, it's not like I need to though. As soon as they come from my car, I'm gonna have to run outside really quick. The old Moss is a flat tire. Sucks. But oh well, we'll have to deal with it as we deal with it. Let's hit the music. Let's chill. All right, check, check. Turn this up. Let's see what it sounds like. Okay, let's see if I can hear my own music here. Let me know if it's too loud, you guys. All right, let's get here really quick. Oi. Good morning. Yeah, there's an echo because I was looping my own voice back from my own stream. When you watch your own stream, there's like a little bit of an echo. Let's go. How are y'all doing? Right, I'm gonna wait on this one right now. I'm gonna look for some plays really quick. Let's see if I can't find myself some decent tickers. Pull up all the bullish ones really quick, just see if there's anything going. Let's see if the doomsday number came out to me from the Discord. Okay. The front center, let's take a look at this guy here. One of our analysis that we do, doomsday here, it looks for positional risk around the risk intervals. We have a 0.85 today. That's really good. Let's see if we open on the rational side. All of our bots are available in our Discord, by the way. Feel free to join our Discord. You can take a look at that. Let's pull this guy front and center. Do we open in the bands? We did open in the bands, but it looks like right out the door we did come to the bottom. So the idea is that we should be tapping the top. Statistically, if that doomsday is correct, and it looks like we already did. So it's the first one that taps is the one that matters, and Nasdaq looks like it tapped or got close enough. The S&P looks like it got close enough, but yeah, so Nasdaq taps, so doomsday no longer applies. Usually what happens is you're in the band, if that number is greater than half, it taps the top, while the other band taps the bottom. Anytime it taps either in the session is what counts. So today it's counted. It's already done, already over with. Perfect. Yeah, so I'm not eager to do much today, and there is a little bit of a selling pressure. Good morning, Greco. What's up, man? All right, UVXY is breaking through monthly. This is a test I want to see was that volume starts to increase on the other side of this. When you interact with monthly hedge first, we always know there's a volume spike as we see, and VIX is starting to push itself a little higher. I don't think this is a day I want to do much on at this point. There's 2 red flags we have going on today, so look at stuff, but let's see if there's any plays that do look good. How's Nvidia going? Nvidia was pop and drop a little bit. Yeah, all stocks are just kind of pushing in that same direction. There's nothing that's really standing out. Let me look at some of the one-offs though, for their own catalyst reasons. Tesla was selling, you know, obviously had the whole Elon and Twitter things. So this guy right here is rejecting hedge, breaking through. No actionable signals just yet. There's really nothing that's super actionable here, at least on my watch list. Let me pull things on the scanner and see. What's up, Bonnie Tech? How you doing? You guys, do me a favor. Can you guys go like, repost, share, all that good stuff? Let's get our stream back to rolling. We just launched it. We're gonna start launching it earlier and earlier every day. Probably like at this time, like this, 8:30 time, my time. Should probably put like my browser to the left because I'm always like looking up to look at the browser. Gonna hurt my neck. Okay. Yeah, so no actionable plays today. I would say for right now, I'm not too eager to long or short much. See where the Nasdaq is doing. I think with Q's, resilience looking slightly better. Nasdaq is the play if there is one between the two indices. I'm trying to see if there's any stocks that do look good though. My thought today is to bet that I'm gonna try to bet that we maintain bull structure here. It's a BLU, it's pushing lower. Resilience is less than 0, so my upper target is that resistance right there. So when you look at resilience, it helps me pinpoint where my targets are. Resilience less than 0, that's resistance even if the BLU is supported there. So there is very bad R&R on this particular setup. No thanks. So I'm going to stay out of this one from right here. Find myself a little better play later. What's up, Mateen? How you been, man? Looking lovely long on BLU and got out when res started breaking a little. Yeah, so that's awesome. Oh, right up here. Yeah. So that is a trick, right? So nice job. And this was even before I got here. So he had a BLU off the open, which is great. Resilience started to falter a little bit. So he got out of the way. Amazing. Good job. Yeah, so I'm gonna hold out on this one. I don't know if I want to do a lot right now. So I'm gonna wait and see. Let me double check on my old. Your driver is en route. Click the link to view service details. Oh yeah. Everybody's like, oh, you're back on YouTube. Yay. Everybody's a mail. Like 11 props today. Y'all are too sweet. Yeah, so I had like a pothole or something yesterday. I think I'm like a pothole or like something in the road. I was just driving like that, and I was like, holy crap. And then as I was driving, you know, it just, I could feel it, right? I could feel my car starting to drag on the left side. And I swear by the time I got home, I was literally driving on the rims for the most, or the rim for the most part, but it was like driving on the tire. So the rims are hopefully okay and not bent, but I did make it like 3 blocks driving on the rims, so it's kind of like, ugh. Trading without rocket scooters is so tried. Love you guys. Y'all are so nice. Y'all really give us all the love. Okay, we put a lot of work in the platform. We have a lot of cool stuff coming out. By the way, let me let them know yesterday's stuff, and let me tune in with my guys, see what we're releasing today. This is fixed and it releases on test. Oh, nice. Oh, I need to catch up. Okay. Note 2 rumors sorting alphanumeric. Okay. We're gonna show you the test. We have new scanner settings, so let me show you guys. This is really awesome. If you have not tried Rocket Scooter, please, link is in the description. Oh, I probably should add like a text note here. Let me be a proper streamer. Everyone smash that like and subscribe button. Make sure you click the link at the bottom of the stream, and make sure you go and check out the Rocket Scooter free trial. Let's put a little text note here and say free trial of our, oh geez Louise, those are some humongous text. Let's get that fixed size. Link. Description. That's better. And I'm gonna need like a cool font. What's a cool font that we can go with? All right, let's see what are my other fonts that I've used. Put this old bad boy down in here. How about my face? Let's be fancy about it, right? Let's write justify. That son of a gun. There it is. Put that right there. Look at that. We're streamers now, y'all. Let's go. We're gonna do a link in description. Are both of my lights on? Why is my thing feels off? My head looks a little sparkly around the green screen of my lighting. Should be like, I'll figure something out. You know, I have to show a new setup. The office is really decked out right now. It's nice. It's much better than last time I streamed. Is the past tense of strummed? I hope so. Okay, so no R&R off of this one yet until res starts to look good. With res looking bad, I'm just staying out of the trade right now. So, how about one of my favorite fonts? Let's see how this guy looks. What do I use for my font? Hold on. I used one on the Be Right Back screen. But boom. Let's see what that looks like. 1 second. Sorry, I'm back. I was muted. Talking to myself here. So like basically like jobless claims, I was looking at those numbers. I'm in that boat that bad news is good and good news is bad. Obviously the labor market is very important to the action the Fed is taking. So if I think we get continuing jobless claims going up, that's going to be action for the Fed to not tighten so much, to kind of tighten us into a further, further stagflation type environment. Of course, we look at this, rate hikes have been aggressive, and any increase in jobless claims is what today's number was, right? We had 1.36 against a 1.34 forecast. So that's a miss. But I think that Wall Street's knee-jerk reaction is going to be bearish to worsening jobs numbers. But I think investors going to the end of the year are going to forecast that the Fed is going to not be so aggressive if they're starting to harm the labor market with their actions, right? So Wall Street looks at the Fed only and it's not going to care about the numbers fundamentally. So that's what we're dealing with today. I was looking for a dip to buy on. Things are looking a little kind of for the morning, and with VIX pushing higher, unexpected volatility is just not really kind of like my bag for the day. So let's check out, while we're waiting, what's on the test server here. A couple of new developments. The development team's been building some new stuff. Let's take a look at it. We have new scanner strategies. We have like greater than hedge pressure. We can search for those. There. Turn off that one. See how this works. The same thing. Oh, let me tell him. So these will be coming out soon. We have some more that they're working on right now. This one. I know that. That's pretty cool. So we can search for stocks greater than hedge pressure. We can search for stocks greater than monthly hedge pressure. Okay, cool. Huge patch notes is something that's coming out. New release. We have UI changes. We have a bunch of stuff coming out on that side. We have playbook rules being changed. I don't know if that's pushed live yet. Oh, and some changes on the graphical side. Let's see what he has. So he's fixing some of the Chrome and Firefox things. Text boxes. I'm just looking at all this stuff. Centered. Interesting. Oh, he's making those changes. I like that. I like that. I like that. Nice. Okay. Okay. I think cool. I'm excited about this. I'm about to look at my trades in just a second. See, I'm gonna look at the charts in just a second. See if I can't find a good trade or something. So now we have the changes for the playbook. The up condition, down condition, things talking about yesterday. They threw those things live. Nearest wall is call. There's no wall. Reversion. Okay, those two mean reversions. Let's double check one more thing. They're doing LMC is now going to be displayed in the 3.0 app. That's good. You guys are asking for that. So looks like our dev team is on it to make some changes you guys want. I'm excited. I'm always excited to see them making new stuff. So this is really exciting for me. We have our dev server going nice and strong. Cash crate, yeah, very hawkish today. And the idea is that you know, looking at my thesis is just this, right? I think that there is a thesis to rally until the end of the year. I mean, I've been sitting out obviously because of that. But right now, you know, I made basically this week I've been 3 for 3, so I'm in no hurry to give anything back. I think I was up like maybe like 32, 33K in just the week. And now, again, that's aggressive trading. I took a really strong long on Friday, and I caught this wave up with some really nice ahead. I think it was like 375 SPY calls that expired this week. I got them dirt cheap on Friday. I think I bought them like Wednesday, and then I bought some more Friday and got them super dirt cheap, and we ran up pretty heavy. So I closed everything out yesterday on the stream. Took a day trade. I think it was at like 2,600 bucks. Show my P&L on the side. Real account, as you can see, account number top of the screen. Real trading, boys and girls, and this is live, no delay. So midterms, the market needs to be up. Yes, and yes, there's a lot of reasons I think the market needs to be up. Let's talk about something really boring for all you guys, put all y'all to sleep today. Let's go. And I'm glad to see y'all here. First of all, hit like and subscribe if you guys like this. Make sure you're following the stream every day. We will be live front and center. This is my favorite thing to do. Yeah. I'm still in the boat that the market is not going to crash till the end of the year. I'm in the boat that there are people that are going to put, you know, stocks in their books. Let me find the COT. This is one of our favorite reports to help put people to sleep on. Looking here, market's still extremely liquid. Let's just zoom in on like a, all right, this is good. So yeah, you know, we look at these categories. This is the S&P futures, and so the asset managers, right? Anytime this green and this blue, this is a little trick I'll teach you guys. When this green and blue are pinching towards each other or pushing away from each other, market's liquid. So when they're trading opposite, these are your net long of the market for the most part, and your net short of the market. And so, you know, you have selling and covering, so the market's liquid. You have shorting and buying, market's liquid. So buyers and sellers finding each other, market's extremely liquid. And liquid markets just don't crash. You need everybody selling at the same time for markets to kind of like drop down. And number two is that markets don't crash. When I say crash, I mean red day after red day, finding lower lows 3 or 4 days in a row. Markets don't crash when the market makers themselves, ooh, market's jumping a little bit. Markets also don't collapse when the dealers themselves are positive. You don't get that crash out until this red line is below zero. So we have, at least in my opinion, another wave up of redistribution before something happens. I could see 4,000 easily happening, maybe a little, you know, tax loss selling at the end of the year, but then rallying until the next earnings report. Once you have earnings season coming up in about a week, we start off with some of the big hitters, and then of course Q1. So I do think we could actually push through here, and then the real nasty stuff starts to kind of come in. We're getting a little bit of a delayed response in how quantitative tightening is trying to be priced in and finally coming into effect. So I think the market's liquid enough to satisfy the Fed kind of withdrawing their participation of giving liquidity to the market. So that's one of those things that I'm going to say that in my thesis goes, I'm going to wait for bull ups. I'm not going to go in and try to force a long trade. I'm going to go in there and wait for long opportunities. So I'm going to take every opportunity to long off of monthly hedge pressure when it comes. I'm going to take every opportunity to long when we break resilience to the top side. I'm going to take every opportunity not to short, betting the market's going to continue to collapse. While volatility is high, it's not that high, and it's actually getting slightly less volatile as the months go by, as proving my thesis, especially in futures, as you'll see, is that the market volatility is kind of decaying, and the market is very comfortable with the environment that we're in. Inflation we're dealing with starting to repair itself as inventory is getting back to the shelves, prices are coming down, and of course people's dollars stretching further. Another thing is that people have been getting their jobs back, so that circulation of not only money in commerce, but you have more people working, putting money in 401ks. So that's liquidity that's piling on top of the lack of liquidity, where the Fed's taking action to not provide as much. So the idea is that if Fed is taking their action out of the providing of liquidity, if we make up for it by continuing to work and more people getting jobs back, then we're offsetting, right, the balance. So liquid markets don't like to sell off and crash, but bear markets don't reverse until Fed starts to cut rates. That's historically proven with probably like last 7 or 8 recessions. So that's the metric we want for the market to become bullish and break higher highs. So until then, my thesis just remains we are not bullish, but not selling off just yet. We are irrational outside of the risk interval band to the downside, so I'm in no hurry to touch the market down here. Yesterday, my trade was I grabbed this dip, and I think it traded it to like right there and closed the stream out. And then I've been flat ever since then. So last week, I think I bought some calls, 375s. I bought them like here, and I grabbed them like right at the end of the day on Friday. And then I dumped them on Tuesday, right at the end of the day. I literally dumped my calls right here. It was a massive win on that trade. And then yesterday I scalped some futures back up, and then now I'm sitting flat. So man, I've been boom, 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 boom. Nice way to start the stream out. So it's been nice. What's up, Austin? Good morning. How you doing? Okay. All right, so I'm gonna do a little bit of a fun thing. So weak dips keep getting bought with strength. I think the shorts covering helps with accelerate it. I think so, and the idea is that my thesis is really solid. I think that Wall Street just listening to the Fed right now. That's it. And the economic data is so slow to move that there's not a lot of heavy action on that. So what I think is that any signs that the job market is kind of like, again, like, you can assume that like increasing rate hikes and QT is like speeding up a car, right? And you're going to drive the car as fast as you can until the car starts to wobble. Right, here's the camera. Wait, why am I? I'm trying to like, let's put the mic over here. but then it's like, hold on. We're gonna get situated here. So in front of the screen, oh, I need to pull the camera out. You can see a little bit more. Hold on. Even see what my hand is doing. Let's turn this guy a little bit this way. Oh. No, that's better. Let's see what do we got shown over here. Well, there's the edge of the green screen right there. Okay, good enough. So I guess when I keep forgetting because used to my camera was like this way, and I'm used to waving my hands, being crazy over here. Now I have to wave my hands here. So if I'm gonna do hand stuff, oh, I need you can see the green around my screen. I need to do something with my lighting over there. Yeah. So what I was saying is that driving the car is as soon as it starts wobbling, you're gonna stop speeding up. Then you're gonna slow down. But once you hit that limit, that's kind of where things are gonna get better. So the idea is that I think that as soon as the jobs data starts to show signs of wavering, and I think I keep saying that this unemployment filing, right, is the weekly number where you have non-farms and the unemployment rate is a monthly thing. So you have more granularity as far as getting that data to prove something. So I thought that would be the most actionable day, would be this. And then my call yesterday was the market would initially knee-jerk and sell off on it, but then it would rally really hard from some kind of support if we see it. Right now I'm looking for resilience to get an uptick, and that would be nice to see. And then I'll probably start to think about it. I'd love to tap along right here at 370. So I think if we have an internal day today, that's one thing, but I think tomorrow is going to be highly actionable. So I'm going to find a good pivot for tomorrow. We are internally trading from yesterday's candle. We are below the open. I'm below the close, even so. We are in between the open and close and in between the high and low. So there's really no reason to bet on a breakout unless there's some kind of actionable pivot. And we know that the only real burst of volume that I'm going to get inside of here. This is a liquidity pocket, number one on the dailies. So just keep that in mind. Oops, where's my trading platform? No trades today yet. Being smart and sitting out when you're supposed to sit out. Rocket Scooter is very much telling me everything I need to know today. We are below hedge pressure. There's no signs market will move from here or move down from here. Resilience continues to find lower lows. It means that there's no momentum to the upside with the stocks today. How do you, I don't know, idea about how if you could pick a random liquidity map strategy during live stream and talk about some nuances. Ooh, I like it. Okay. That's a great idea. Oh my. That's hilarious. Somebody just made something and sent this to me. Hold on, let me show this. You guys, I love that y'all keep making funny memes and stuff. Let's see. Everyone else, North Rockets here. That's hilarious. I love it. You should post it on Twitter. I'll retweet that. That's hilarious. LOL. The mean reversion code confuses you? Yeah, let's talk about that. So a random liquidity map and talk about the nuances. Yeah, so let's actually do this. Let's do that today, and then we'll talk about a mean reversion. Okay, so there's mean reversion is not confusing when I describe to you what the action is. And mean reversion, the action is that the market is balanced and non-directional. That's it. Doesn't matter what the other two codes are. Anytime you're in between bull and bear positions, market is stable and not doing much. So market's stable and not doing much. I'm not doing much. That's basically it. Mean reversion means that you have call walls and put walls sandwiched just like that. What a call wall, basically what our platform's technology actually does is it looks for illiquid buys and sells of the underlying SPY, for an example. Right? People long the SPY, people short the SPY. Engaging in a new position, not covering and selling, those are exiting positions, but entering a new position, entering a new position, you're adding risk on the table, long or short, right, of the underlying. And then when there is no other side of your trade, the market maker is on the other side of the trade. So they're the ones engaging in a new trade against you. They're the ones that bought calls to hedge. So short with a call means that you can neutralize your trade. They both go in the same direction, and that's it. Long with put is the same way. Long SPY, puts a SPY. So when they have that balanced trade, we're looking for calls and puts. And that's what these are: market maker calls, market maker puts. And so what this does is, if the market maker's calls, our platform is pulling this out. That's why our platform stands alone, is that nobody has technology to show you where dealers are playing. Our algorithm knows what dealers are supposed to do, mathematically derives what their action is from the market and pulls those options out. So inside of here, if this is the bull zone, we find those calls, we call this the bull zone. The bull zone has reverse engineered that there are bulls there. These are the real bulls of SPY and the real bears of SPY. So if you're in between the bull zone and the bear zone, right? Think about it like this. The bulls inside of here, all of these bulls are losing their trade. Inside of mean reverting, like this range right here, middle reverting or mean reversion, whatever, that the market will revert to the middle. It wants to. So all the bears are upside down in the middle. All the bulls are upside down in the middle. Everyone's losing their trades except for the market makers, right? They're neutralized. The people who sold those calls to market makers are also losing their trades. The people who sold those puts are also losing their trades. So it's like the participants of SPY are trading against the sellers of the options, and everyone's losing to the house. And so the idea is that in this balancing act, and there's essentially no incentive for dealers to raise or lower the price with no reason. They're going to keep it here all day long. They're going to burn theta on these options. They're going to, so the market just doesn't want to go anywhere. And the way I trade it is I trade from wall to middle or wall to middle if there's an actionable trade. Really small to have a 20-point run inside of here, plus or below the risk interval band. So, market's also irrational. So I'm not going to try to take a stab. Resilience is trading somewhat lower on this pop-up. That's not a long signal for me. That certainly is a resistance signal, and I would actually more prefer to take a long off at the bottom there. I don't want to short it either, because again, inside of the middle, I don't do anything. The rule that we have here is once you touch one of the walls first, which you did right there, and then the minute you pass through the middle, day is 100% over. And so from this moment in time, I don't make any day trades anymore, and I'm sitting out, which when I finally got to my computer, there's nothing to do. So the actionable rule is once you touch a wall and then touch the middle, the market has found balance, and you have to kind of bet when you're trying to trade, is there an imbalance that's trying to be satisfied? Well, the market is perfectly balanced here. It's not balanced, certainly does not have a second L, but we're in the middle. There's no reason for the market to spontaneously jump out of one side or the other. So we talked about this lesson yesterday. If the market were to rally, it's because you have shorts covering. You have people exiting their trades, providing like instantaneous illiquidity. And the middle is very liquid, right? And dealers are going to find liquidity as their job. Higher liquidity, more traders are trading. Buyers and sellers in close proximity. The dealers don't have to hold a lot of risk. It's easier to balance and maintain. The more trades that are being taken, dealers make fees off of every trade that's made. So obviously maximizing the number of trades is also their incentive. Does that make sense? People that were asking, Bonnie Tech. So, somebody asked me about closed caption and translation of this into other languages. I don't know how to turn that on. If you guys can help me figure out how you could put subtitles on, and I know YouTube can like convert them to other languages, because we're going global now. The idea is that when markets are liquid, we just don't bet that they become imbalanced again. So you watch, right? The mean reversion trade ends in the middle. So once you hit the middle, right, there's no more day trades. Like basically from here, I normally just close out my platform, which means it's this little button right here. Let's put it a color it's not gray. This little guy right here. Be very familiar with that giant X on the top right of your trading platform. This is probably like one of the best trades you can ever make. Is you trade your insanity for a nap. Just close your shit down and go chill. When the day's balanced, there's no breakout, there's no anything. Don't try to force a trade, right? What we do, especially at Rocket Scooter and what we excel at, is we get to show you strategically how you can have calculations that are literally helping you decide if it's even a good day to trade. Not just waking up, be like, should I long today or short today? There's no indication the market's going to go anywhere, especially once that balance point has been found. So the smart thing is that I'm going to sit here and laugh while everyone else is sitting here trying to pick a direction. We should play a game. Let's play what are the Twitter gurus doing today? Daddy's gonna sit out. Oh, I have a podcast today too. Let me double check to see if we're doing the street today. The featured correspondent on the Streets weekly podcast. They take it off like 3 or 4 weeks. So let me see if today I'm on the schedule. Hold on. So that means I'll just take the day off, get my car fixed, and then come back in. Are we doing the? They're not coming back today just yet. Okay. Probably next week then. Okay, cool. Let's have the whole day off. Sweet. Yeah. All right. So going forward, no trades yet. Let's pull the scanner up. Okay. If you guys want me to discuss the nuances of one particular setup, feel free to ask me. What do you guys want to look at? A bull setup or a bear setup? I'll go through one of the liquidity maps for y'all. Oh god, that is so funny. Let's select. Let me go here. Get those numbers up. Make sure you guys like and subscribe. Give us a love on the stream today. If it's your first day at Rocket Scooter, feel free to let me know if you have any questions about how to navigate. We'll walk you guys through some of the stuff. Okay, let's do this. Go to this. Good to see you guys. All right. Let's. Right there. Cool. I don't want to put like too much microphone in the way. Okay. I usually do it like this. That way it's out of the way. I actually have some wireless mics. So the next thing I'm going to do, y'all see next time, I'm probably going to have this out of the way, and I'll have myself a lavalier, what do we call it? Lavalier mic. And that to my shirt. Got a bunch of cool stuff. Let me see if I can't. Oh, I'll turn that on later. Okay. How did I know that SPY might bounce to give you confidence SPY on Friday? Absolutely. So this is a trick that we teach at Rocket Scooter. It is called red lines. Red lines is one of the most important imbalance points that we look for. And I keep track of all of them. There's a lot of calculations shown on this chart. Yellow lines and red lines mostly are what's being seen. Ignore all the green that you're seeing right now. What does it say? What are these? Bidirectionality. Okay, let me delete this really quick. So these red lines are interaction points for like bounces and such. I had one sitting here from a long time ago, and these are basically just go way back in the day. And anytime you interact with them, I take a bet on a bounce. So ideally, when you have recessions, traditionally, if you've been trading long enough, you'll know you have 1, 2, 3 legs down is very common. It's a very psychological thing. And normally when you get that third leg down, it usually finds lower lows before it tries to amp up. I was believing that we would actually mean revert for the entire rundown going into earnings. And I was believing that people are going to start betting on what the Fed is going to do. So I was thinking that the market would be bullish going into the end of the year. Not necessarily bullish on the economy, but bullish on the bounce. And I had this nice little retracement level there. So I started piling in right at the bottom. And that's it. I bet on those bounces, and I bet the market is not going to continue to sell off. And just my thesis is that the market's too liquid to sell off. We talk about this all the time. I've been screaming on Twitter for months that this is probably the low. In June, if you guys remember in Twitter, and again, this is what we try to teach you guys. So I want y'all to feel free to go sign up for the trial at Rocket Scooter. We teach this all the time. I mean, one of my pinned tweets was way back in here. On June 24th, here's your 2-month bear market rally potential. Bottom is in June for a 2-month rally. So, which was essentially like right here, right? So as the market was falling, I don't do any Babe Ruth calls, but like literally nailed it like 2 days away for this big 2-month rally, which is exactly what it was. And then of course, you know, once it got to the high, there's another tweet. I think like right here, I stopped longing. I said, I'm going to start shorting the market. I remember shorting Apple and a bunch of other things. I mean, I caught that pivot. I caught that pivot. I mean, it's really nice. You guys follow back the tweets, but ideally we look at liquidity analysis, and Rocket Scooter is exactly the platform to do that. Liquidity is all you ever really need whenever you're starting to try to make bigger decisions in the market. Wall Street has no problem telling you what their positions are, and that's what we look for. We're not guessing based on like silly stuff like indicators and things like that. Very, very weak analysis uses technical indicators. You ever see somebody's chart with a bunch of, you know, like things on it that just like look like patterns and colors and shapes? That stuff is very weak. It can't predict anything. Nobody can predict the stock market. So liquidity analysis just looks for where people's active positions are. It's like looking over the shoulders of Wall Street as they're doing their homework. They're telling you where they want to be long. They're telling you where they want to be short. They're telling you when they want to be long and when they want to be short. And all that data is built into the options positions. And that's basically what we are looking at. If that makes any sense. So back in the day, I knew that this red line was going to be a resistance. When we got there, I took a stab that the market was going to turn around and move higher. We also got monthly hedge pressure breaks, and I always long on those things, and that's just kind of a sign. I like to not be short unless I'm in bear structure, and then I short against it. So bear structure means you are below monthly hedge pressure, and I will short against it to bet that you stay bearish. Anytime you're above monthly hedge pressure, I particularly don't short, even though short trades are available. I only short in definitive bear markets where this is an easy day to short on. Any of the setups where you're below monthly, it touches monthly, I will short right off of that tap to bet that we don't turn around. Other than that, I don't bet that markets that are sustainably bullish, pretty much even in recessions, people are buying this stuff. I don't bet that markets become bearish. So that's the difference between me and other traders. Good looking, Matt. What up, Fiddy? How you been? Good to see you. So essentially, I'm just betting on the market not crashing until the dealers are positive. I mean, dealers are no longer positive in the S&P futures, and this is a common trend that we see when we analyze community traders. So essentially, these are little advanced topics that we're not going to cover today. We have tons of videos in Rocket Scooter Library. If you join our program, you can watch them. Inside of here, anytime this red line is negative, the market can free fall. When this red line is negative, when in a bear market, that's when I'm talking about a crash. Typically, you want dealers to be shorting against buyers, which is that imbalance that raises markets. We are getting waves of selling, and then now we've got waves of buying. Ever since right here, people are starting to like put stuff back on their books, but the dealers are still holding the bag, so they have no incentive to crash the price out. So I think that we're going to survive through earnings. We're also building a surplus on inventories, which means prices are going to go down, which means there's no longer a bottleneck in logistics that is as bad as it was before. So, and people are getting their jobs back. So, market's looking a little stable now, but again, we're not flipping bullish until the Fed starts cutting rates. But I'm going to bet that as long as the jobs market is kind of like wavering, or unemployment rate is going up, or jobless claims are going up, that people are going to start longing the market against that bad news, because bad news indicates the Fed's going to not be so hawkish. It's just like, trader tricks. You have to understand that Wall Street's trying to price in what the Fed's going to do before they do it. And if we start losing jobs, you can bet that we're not getting a 100 basis point hike coming in the next round, right? So these are the things you have to think about. Does that make sense, everybody? So, Jen Lee, overall, like my entire thesis is that I'm betting on forecasting what the Fed will likely do. And I'm saying that if we get jobless claims going up, which we did, that Wall Street is going to be very comfortable getting out of their shorts and not betting against the market, because then that means we're not going to be getting 100 basis point hikes, because the Fed doesn't want to crash the job market. If the Fed crashes the job market by putting pressure on the stock market and stocks start to tumble, then the threat of people losing their jobs is even higher. And when people lose their jobs, when we have inflation, it's called stagflation. And that crash does not recover easily. And that puts the burden on the Fed 100-fold to rescue us and bail us out. So the Fed is not going to drive us into a market crash. That's why I bought the dip. See, when you think about it as a trader, if you used to buy the dip because your moving averages crossed over, I just got to teach you guys, you're trading against people like me that think like that. The goal here is to amp you to the next level so you think like that as well. Your job is not to look at what price is doing and then try to make a direction. You were the last person in that party. The idea is for you to speculate and then find an entry point on your speculation that makes sense, which is what we try to teach you guys to do. So I'm building a bull thesis. Let me wait till I get some bull entries, right? And that makes perfect sense. Let me answer some of the other questions in just a second. You guys all follow that? So the goal is just to try to do any type of next level analysis that gets you in first, right? The idea is to be first to a thought, or as first as possible, and then look for those entries. If I'm bullish, right, I should be longing, pretty much right here. Again, we talk about the volume interaction with hedge pressure, and then that volume starts to decline while we're on this side of it. I still don't want to trade with resilience less than 0 because it has that half gap as resistance. Okay, answer some of y'all's questions really quick. With S&P so low, no expectation of breaking through that half gap for now. Crank it up. So resilience is a predictor of half gap's pivotability. So half gap is down when res is less than 0. Half gap is resistance. I'm not betting that it goes higher. With res above 0, then I bet that it goes higher. So right now, it's better safe than sorry. With resilience falling below, you see right here, when right about here, res crossed to the downside. So some of our traders today were like, yeah, we longed the market, and then res started to waver, and they got out. So, clearly res in this area, this is resistance, right? Pointing down. So even here, this is seen as resistance. I'm not eager to long this until we get a pop-up on res. Yeah. Come check out the free Discord. Thanks, Austin. Does that theory work even with Catalyst? Which theory, Mitch? Remind me. Let's go back in time. The theory of which portion, what you were saying. Could you explain the single mode? Absolutely. Yeah, if resilience goes above 0, I will chase the bull long up on the upside. Absolutely. But one of the things we have to talk about too is another indicator that we have. We call it doomsday, is our code word for it goes in the platform. Is this indicator right here. It's the risk interval, and the risk interval has to do with the risk of futures moving a certain direction in a certain amount that causes like solvency problems with the participating firms. The margin requirements are set very meticulously for futures. These green bands, it's called its doomsday indicator. I have it just in Thinkorswim, is very important to the market. Anytime we have an indicator that comes out in our Discord, we have a bunch of bots that I want you guys to take a look at. We have this bot that publishes a number every day. This doomsday number is very positive. And so essentially when this number comes out, if it's greater than half, I expect the upper band to tap at least once in the session, which means overnight too. If it's less than half, we expect to touch the lower band. So if you are in the middle when you open the market, we consider it rational, and it wants to touch the upper band at least once. And with S&P and NASDAQ, it's the first one that touches, ends the move. So in the session, it looks like it got almost there. But we consider it already completed. So when you are outside of this band, we call it irrational. I'm not too eager to take positions inside of here. Anytime you're inside the band, then we're back to business. So I don't use liquidity map or playbook outside of the bands. I let the market be irrational. And I did, my thesis of longing, I just didn't do it. But it looks like it's being okay here. So the single mode on liquidity map, let's take a look at that. Yeah, so what it does is it allows you to pick any single date you want. Let's go right here. Oh, my girl's so sweet. Text me, she goes, have a great day at work today, babe. Good luck on your stream. I know you're gonna kill it. Sweet as fuck. Love it. All right, let's go. Can you explain the single mode? Yeah, so let's go. LOL. Don't worry, I love you guys just as much. But, Single mode allows you to, and you replied back, what? Gotta return that love. Oh shit. Right, I gotta be a good boyfriend. Aw. Yeah. Just say, wait. This reminds me, do you guys remember any Always Sunny in Philadelphia fans in the room? So do you remember the episode where Dennis and Maureen got married, right? And he was like, Maureen Ponderosa. And he was like, you know, she was texting him. She's like, I love you. And he's sitting with the guys. He's like, she said, I love you. Do I say I love you back? Because like they got divorced like the next episode. And he's like, I love you more. Okay, that should be it. That should end that. No more of that. And then, oh, I love you most. Why is she always trying to one up me? How do I beat that? I don't know. God, she's always like trying to one up me, right? You remember that? Anyways, we love Always Sunny here. Okay, return that love. All right, hold on. Dear girlfriend. No, I'm just kidding. The best show ever. The best show ever. Okay, let me see something nice. Okay. All right. So in single mode, basically what it is, and we're going to have a couple more modes coming out. Just let me show you what the newer test server platform is going to look like. They've made changes on the test server. You can see one of the things is that in our test server, I'll put them side by side. You'll see it looks a little bit different than this. So this is the release that's going to come out tonight. Things are going to be changed a little bit. You know, the functions are looking a little different. Let me see how they're doing this. And let me walk you through single day, by the way. And everybody, make sure you go to rocketscooter.com. Get yourself a free trial. There's no credit card. We actually made it so you can just check it out and do it. Found it. I think it looks pretty good. What do y'all think? Y'all like the new layout? Let's compare it side by side, right? Just give me a quickie little vote. Y'all like the new layout? Just of the text, right? I put in an order for our guys to like basically like lay it out like this. So on the right, you can basically see like what you selected. And now a question I have for y'all is, do you think somebody said, how does this scam work? No, it's not a scam. It's a trading platform. Like it's straight up. It's like charts and watch list and scanner and things like that. You ever traded before? Chuck Kreiser. I'm just using a trading platform to trade with. That's it. Feel free to check it out though. Distance from half gap on the scanner. That's actually coming out in this next batch of scanner settings. So it'll be out in about a week or less. So we actually built a trading platform, it's an algorithmic trading platform. We bring a new type of analysis to the table. You see there's charts, scanner, things like that. We show you where market maker hedging is. We show you where market maker positions are and options and risks. So ideally, you know, we're showing you a different side of the market that technicals and fundamentals don't show you. So it's just a trading platform. You can pick anything you want, pick your favorite stock. Yes, sir. Crank it up. We got that for you guys. All right. Do y'all like the new layout? Like I said, we're developing it as the years go by, so you guys can always be part of the process by checking out some of the cool new stuff we're doing. So the new layout looks a little bit better. I think the idea is that what you select will be shown on the right, like mode daily, it'll show you. So as a quick glance, I'm at SPY, this date, daily mode, and auto, right? When are we getting DD? You saw a stream 2 months ago when you said it would be out in 1 month. Yeah, that is a good question. At the time it was planned out to be for a month, but what we did was we actually planned out our 3-year roadmap and we pushed a whole lot of stuff in front. So we got together with the members, we looked at everything. The immediate change was going to be adding more strategies to the scanner. DD being a whole thing, it's going to have a little bit more work being done to it before we can actually present it live on the platform itself. So our folks that are working on things are building a lot more stuff. One of the first things we'll have before DD is dynamic hedge pressure. So we squeeze that ahead. Dynamic hedge pressures are those overnight estimates that we give for basically overnight trading and early morning planning. And those things that we put right there are going to be displayed right here. That's the first project coming out. So one of the things is that as we launched and had our first wave of affiliates kind of like talking about the platform, we had a huge influx of people come in. And so kind of asked you guys what you wanted, and we planned out a roadmap. Now I'm going to tell you DD will be here before the end of the year for sure. For now, just use the bot in the Discord. I mean, it's the best way to do it. Having it being automated on the chart is a lot of extra things. We have to get futures conversion data in, which means we need a futures data feed. And those processes are going to take a lot longer than we thought. So when we actually planned it out, we squeezed a bunch of stuff in front of it, but it will be part of the process to have it this year. So ideally, our goal is first, new scanner settings. Second is we're going to have platform changes where we now have multi-time frames, multi-candle durations. We're going to work on having your user settings saved first before a new indicator. Imagine having to come in and redraw on all your charts every day, right? So stuff like that is more important than the new indicator, since we already have a way to get it to you. So back to single date. I know I'm wrapping a little bit. So single date is going to remain for the new release. That's why I was trying to show you what it's going to be. So what daily mode does is it's an automatic process that looks at all the correct things in the back end. It'll use whatever date you put in this box will be removed on that schedule. An example is if I have daily mode, it will look at every single option that exists for that ticker, with the exception of whatever schedule's in the date. So if you put the third Friday of the month, you'll remove the third Friday of the month of all the existing options. The idea when you have daily is your daily calc, your daily liquidity map is generated by daily mode. So it's, for instance, with SPY, the walls on SPY are dictated by every single strike of every single option for SPY, with the exception of the 21st. That's removed. And so why is that removed? Because that has to do with what the walls are showing here. Now this function is controlling the walls here. So as you see on daily mode, you can see that I have, one second. I have 375 and 373, 373 and 375. That's that bull zone and bear zone. But if I go to single date mode, it only uses the date in the box and only calculates that date only and no other dates. So single date will just calculate any date that you want. And what is that balance for that expiration? As if I'm targeting to trade an expiration on that date, I clearly want to have that date's positions displayed to me. Wait, somebody keeps saying, let me guess, to help people improve their lives. Why do people make a trading platform? I don't know. You have to have buttons to push and charts to chart. It's charting, right? So feel free to have fun with it. And so single date is the same as monthly, yes, in this particular instance, but in the new release, we're actually going to have a monthly mode. So single date will allow you to change the date in the box to anything you want. So if I click this button, right, I can pick any single date. Let's say for SPY, I want to look at just what Friday's expiration is because I'm trading for a Friday expiration. And I can see that on Friday, 370 and 365 are where those bull and bear positions are. And then of course, the calculation of, which we don't actually show here, which we actually need to put in a note for that. That's okay. I'll get to that later. So ideally, it's like I will know where there's the bull side and bear side of that particular date. And also we'll be able to calculate a single mode hedge pressure, which is that particular date as well. And I need to give him a note on where to put that in the test. In the walls itself. We need a single date hedge pressure. So whatever it calculates for that day, that in there. So, and now what single date does, if you do single date in auto automatically makes it the third Friday of the month. So auto automatically chooses monthly expiration. So in the future, when we have monthly as a clicker, you just click monthly and it will force this to auto, which will force the monthly. If you click single date will force this to manual and ask you to input a date. Yeah, dude, it's all right, man. Every time I see like a new person like streaming or trading or talking about trades, I'm always like skeptical as well. Like, I'm just a trader using this platform and just showing off how I use the platform to make analysis. I do live trades, so it's not like, and this is a free stream, so you can just chill. Like I haven't bought anything today, but if I buy anything, you can see it right here. So if you guys are ever looking, we have a huge community. We have like, I don't know, 3,800 people or something like that. Or no, sorry, 3,400 people in our Discord. We've got like, you know, like 7 sometimes subscribers to the platform. So the idea is that the modes, there's gonna be 4 modes: daily, monthly, single date, and monthly map. So monthly map is a cool thing that's coming out, and I'll show you how that works in swing trading. How many swing traders in here? Let's get some hello in chat. And by the way, everybody, really quick, click like, subscribe on the stream, give us some love, post in the comments, you know, good stuff. I'll walk you guys through some stuff. Yeah, so the current layout, Kazi Imran, that is actually changing in that new release. So one of the things is in the settings, you see how right here you can change some of the stuff. These settings will change this. That is another thing in the release, is those color changes. So that's one of the things they are going to be changing here. In the new release, you'll be able to come in here and like whatever these numbers are, you can change like the text. So example, like bare text, I come in here and put like, I don't know. And we're going to get rid of this whole like text box anyways. So that could change the text to black. The weight can be 4. 3. So, you know, I can change the colors, the text. Yeah. We're trying to do like the as minimum work as possible on this until we revamp this. So these settings are going to be moved to the chart. And then of course this will have like a gear that you can click on to change its own individual settings. It's just all that customization feature is like a whole project of itself. So it's like we have to race. Do you guys want the indicators first, or do you want the customization? So we try to do these like quick fixes to at least get you guys to where y'all want to go. But yeah, you were correct. These things kind of look booty. So let's change the text color right here. And the new platform will have bare text available, so I'll be able to change it. That Thinkorswim indicator, we call it Doomsday, but it's a risk interval indicator. You program your risk intervals into it and it just shows you where those boundaries are that are being hedged on. So monthly map is a really fun thing. You guys, let me show you how to do a monthly map. Monthly map is how you swing trade. So I want you to give me like one particular stock. Monthly map, I'm about to blow everybody's minds how to do this. This is the coolest thing ever, and this is how I plan all my swing trades. And Rocket Scooter is definitely the best thing for me to plan a swing trade with. I'm gonna show you how I do it. How I plan out a swing trade. Okay. I just made a little tweet here about it and have some fun with that. Okay. Okay, ticker. Give me your favorite ticker. Yeah, Chuck. So, dude, it's free Discord. Let me show you like this link right here. And I think I need to make my bots post the link of the Discord. Go to the Discord really quick. Check it out. It's a free Discord. So seriously, helping people. Let's just be honest, right? We love helping people, but we also love selling a platform. It's a trading platform, right? So, in all honesty, we just have a trading platform. So it's not like a trade room that's like, you know, give me 20 bucks a month, I'll help you and your dreams come true. All that stuff is really silly, and we actually make fun of that too. So we're on the same page, brother man. Trust me on that. You primary day trade futures, but doing so since the 90s, some stocks and options, seen so many of the BS platforms. I mean, TradingView, Trade8, Ninja Trader, Thinkorswim, pick your platform. We're like them. Sometime early next year, you'll be able to trade through our platform. You know, things like that are going to be, and again, we're just a tech company. So, oh, futures trader, huh? Yeah. What's the best, everybody out there, what's the best algorithmic futures trading platform that you've ever seen for this futures guy? Somebody name a really good platform. Everyone in chat, what's your favorite futures platform? TradeStation? TradeStation's pretty good. I used Trade8 for a while. I mean, I still do, but like since they first came out, Trade8's golden. I love them. So monthly map, it's ready to go. Okay, so let me go ahead and put a fresh chart. Somebody give me your favorite ticker, and I'll do a monthly map of it. I'm gonna show you how I swing trade that thing like a month out. And as soon as the guys here pick up the car, I'm gonna have to kind of bail. But appreciate you guys staying in here and checking it out. I hit some like pothole or something. I hit something in the road driving. My car just like, you know. So big flat tire front left. They got to kind of tow my car to the dealership to get the tire replaced. So Tesla. Well, SPY is an option, but we always do SPY, right? Let's look at Tesla has a catalyst. So let's look at something like Apple. I'm gonna skip Tesla. Thank you. In the middle of a catalyst, let's go ahead and pull Apple front and center. Okay, so in a monthly map, one of the neat things about that is I'll show you just basically. Let me zoom out on like an hourly chart. Okay, so let me see what we can do. And monthly map will be something that's automated on the Rocket Scooter platform going forward. So let me go ahead and just shift my things around to make it look like this, right? Let me go ahead and. So I can't make this smaller. I'll just put it behind it. Okay, right there. You can also pull out the classic app, which would actually make that easier, but let's do it like this. Okay. So what I do on Apple, actually, I will do classic app. So we have classic app, which is the same app, but it is just without charts. So the same information will be here. So let me put this on the screen to show what it looks like. Okay, so what I'll do with Apple, and this is the same as what you see monthly, same as single date. So right, with Apple, let me see what it's gonna look like over the course of the month. Now we know the 21st is monthly expiration. Let's look at the 7th, 14th, 21st. So single date, I would put in the single date, the 7th, click single date, and then refresh, right? And what it does is it'll show me what that particular day isolated looks like as far as risk goes. So I can see like Apple, and I'm gonna just draw some boxes. Maybe I'll match the same colors as this, right? So on the 7th, which is Friday, 140 is right here. And I'm just gonna draw like a little box, right? 140 and down, just so we can see where that split is. And you see right here, 140 is where that bear side of the market is. And then let's go ahead and draw 142, which is where that bull side of the market is, okay? So I can see that Apple is clearly looking pretty okay for today, right? Make this like darker gray just to match what we do in Rocket Scooter. Boom and boom. Okay. And I went ahead and picked the same gray on accident. Let's go ahead and try this one more time. There we go. Okay. Perfect. Okay, so now let's fast forward a week and go to the 14th. Right. So on the 14th, let's move out another Friday. We have 130 is that bull side. Or that bear side split here, and 139. And so when we have liquidity maps and monthly maps drawn on the chart for you, it will look something like this. And let's go ahead and just pick that 21st by itself, and then let's draw out what it's looking like. So you can see where Apple's expiring positions on those days are very easily split like this, 134 and 110. So you can see that as Friday to Friday goes, do you see a pattern, right, with Apple? And so I plan on my swing trades just like this. And every day, this monthly map will move around a little bit, but I can always adjust my position. So you can see there's a big split between 34 and 110. So you can see that if I were to go ahead and let's put this on manual mode and see if I can't force that to converge a little closer. 134 and 125. Okay, so let's go here, 125. Okay. All right, so you guys see so far, right, in manual map, I'm going to draw on the chart the different zones. And when we have the map for you, it's going to be really, really sweet. So you'll click monthly map, which is a cascade of single dates, and it's looking at just the expirations. So, you know, the algorithm will draw like a connecting line like so, and draw another connecting line like so, right? And this will be like, you know, bear. And let's say that this monthly map is done today. So let's label it with this date, 10/6/22. Does everybody see? Is this pretty cool so far? Do y'all see where I'm going with this? You have calls expiring in the money that day, that day, that day. Puts expiring in the money that day, that day, that day. So this is kind of like the balanced zone. Can I get a hell yeah, that's cool in chat if y'all like that? Or any questions you have? Balance. So in a particular sense, if I'm trying to buy the dip on Apple, right? I know that at least now I've got here and here and here where Apple could possibly retrace to and still be on the bull side of the market, right? So the idea is that I'm not bearish on Apple until it crosses into that zone, right? So ideally, if I'm aiming my options targets, if I want to buy out of the money puts on Apple for 2 Fridays from now, then those are the puts I'm going to buy. There you go. I'm going to bet that if I want to be bearish, I have 2 options. I'll buy those puts. Or if I want to hedge by buying puts against my long, and I long Apple right now, then I've got puts right here to hedge my long, because if I'm long and we lose, if I want to hold Apple for a week, then my puts are right there if I lose the bull side. Easy as that. I'll slam in a White Claw. I wish. It's the other side of the coin. I'm slamming liquid crack, which is called Celsius. I love these things. They're so tasty. I would totally be drinking a White Claw though. I mean, let's not lie. I am a basic bitch. I can White Claw it up all day. Degenerate juice. Hell yeah, it's like completely degen juice. Like Celsius is the best. So you guys understand the difference? Thanks, Charles and Sergio. So in the presentation is that how do I want to trade, right? So monthly map will let me see this. Now again, this monthly map may, you know, fidget around a little bit. Every day, all of these numbers will refresh, right? So I'm going to draw with like a different set of colors. Okay, let me just show you an example. So say that I'm bullish in Apple, and I'm going to long right now, which maybe I might actually go in there and buy some Apple. I kind of like what Apple's doing, right? It's looking pretty hella good. So say that I want to buy Apple shares and I want to hold them all the way through monthly expiration. So let me show you this. I'm going to buy some Apple here, but then I know when we get to monthly that I still have some bull side there. So let's just say that this, right? Pretend that I'm going to buy 100 shares of Apple and I'm going to buy the dip in case it falls lower. Well, that's the lowest dip I'm going to buy on this day. So I'll say I want to buy like 200 more shares. I'm just going to make an example. So I buy 100 shares and the Apple starts to move up like that, or Apple does whatever. I buy 100 shares and then week over week, I'm going to have one put there for those 100 shares. And then as Apple trades around or whatever, right here, I know that I'm going to want 200 shares in case it falls lower. And I'm also going to want to put there as well. So as Apple starts to trade up and whatever again, then I will buy my two more puts there. And if Apple does fall, those puts have buffered my 100 share long to a loss. And then I just add 200 more shares. So now I have 300 shares at a cost basis right here with already in the money puts and new puts to protect me in case we fall out of the bull side. So ideally you can do, you know, covered You can buy covered options, or you can just speculate, right? If I want to be bearish and I want to buy some really cheap out of the money puts for that expiration, I'll buy them there. That expiration, I'll buy them there. That expiration, I'll buy them there. Because that's where that momentum picks up when we go bearish. So say that I bought 100 shares today, and I'm going to hold it for a week. And the minute it rallies, I buy cheap puts here. So I got 100 shares and I got one put. So I am now neutralized. This put is a guaranteed stop loss of all 100 shares, exactly right there. And my loss is minimized so I don't eat up my buying power in case Apple crashes. Now I have money to play with because this put is buffering that loss. So now I wake up on maybe this day right here and rerun the map, right? And if I rerun the map, it might show me that the positions might shift around a little bit. What happens if I rerun the map, you know, a week later on 10/13? It's a really crummy color. Let me try different color. 10/13. So on this day, I run 10/13 and I have puts here. And now, you know, the bar is down there. And this is down there, which means Apple can dip even harder. So I have a choice to make. If I want to sell those puts and buy those puts, it doesn't really make much sense because it's going to cost me money to get out and get back in. These puts are going to buffer harder in case the market crashes anyways, which is good. So I don't really need to do much, right? I've already got my insurance. But what happens if the map moves like up, right? And I have my puts that are way out of the money and Apple may dip a little bit, but these puts aren't really doing much and wasting time. So I could close those out and actually buy those puts instead, right? So I can adjust my position as necessary if I think it's worth it. If there's drastic changes, yeah. If there's minimal changes, not really, right? So every day I'll rerun the calculation and then come out with a new map. So monthly map is just for planning out months at a time. So speaking of Apple, let's get some out. Let's take a look at it. I kind of like what Apple's doing, to be honest. And let's go through. First of all, we have earnings coming up, right? So let's double check when earnings season is. And I'll demonstrate some playbook stuff for you as well. Apple's probably in a couple weeks, right? You know, when techs are going to kick out really good. We have tech week, I think, starting on the 21st, maybe the 24th. Actually, Apple is right here on the chart. I'm such an idiot. So Friday after expirations. We got a month until Apple's earnings, right? Yeah, I know. Somebody just reminded me, Matt, you're an idiot. I don't use Thinkorswim enough anymore that I remember that this stuff is actually there. Okay. What's y'all's favorite Celsius drink? Let me know. I love the Fuji apple. It's like the best. Okay, so this is monthly map, a pretty cool feature, right? So we get back to, you know, full rocket scooter platform here. It'll literally just be a mode that you click called monthly map. And ooh, resilience is starting to press positive. I like it. In monthly map mode, you will have the ability for that. So let's do Apple really quick. And let me see if I can't pop up some Apple stuff. Apple's a BLU and we're breaking hedge pressure. I actually do like Apple. So let me pull that map back up because I want to see what I want to do. If Apple's going to run higher, where's that resistance? So another trick to do is you're going to go to single date. There's the date. And we're going to look in the upside of Apple burst. 330. Hold on. Apple. And let me get my ladder front and center because I'm going to look for some Apple calls. I do like it. The market's directional. Volatility's like prepping out. Apple on monthly mode is 10/21/22 single date, 134 all bullish, and there's no resistance to 150 on Apple. So good. So let's look at some Apple 150 calls for monthlies. Let's pop those bad boys up right now. 274 a pop. I kind of like that. Copy that. Paste it here. Now I'm gonna step into this one. I do like the idea. What, 275, 300 bucks a piece. Let's put like. Res is teetering at positive and Apple's starting to hold really good. I do like the idea of cost averaging in on here. So 145 to 150 is going to be my strike. And I mean, the stop is basically a 1.5. I mean, it's like on one delta, that's like a 3-to-1 trade. So it's not too terribly bad. I wanted to also make sure things are looking pretty okay. Bull long up on liquidity map on the short term is actually pretty good. Bull long up, I look for interaction points, bouncing up a hedge pressure, etc. Apple's already filled the gap and started selling really heavily. So I don't think it's going to get momentum today, but let me see if that VIX is looking pretty solid, and I might actually start building up on that. Now, the reason I'm building a position so far out is because, well, let's hold on. Oops. Is that I want to make sure that I'm playing on the monthly. Now, VIX is losing that monthly hedge. I like that idea. Let me step into... $7 on a downtick. Okay. All right, so I got some calls. I just got 7, a really small starter position on that. And I'm going to, again, it's based on, and let's put our monthly map front and center. I do like the way that looked. Okay. So now talking about my trade, I do have Apple at 150. I'll split a little line here. And then every day, ideally when we start doing like, when Rocket Scooter has eventually a way to do like liquidity map and you have your broker connected and everything, it'll be able to like draw your own position, your own targets and everything on the chart itself. So I do like that idea. The gap and go didn't fill. It's still holding the fort. As a matter of fact, I think I don't want to be like a little bitch about this. I think I want to have a decent cost base at 260. I'll probably get in a little bit more. Let me let it teeter around and try to get a better spot. That's my strike. We'll call this in the money. My position. And then let's make it an awesome color like a pink or something. Put a label in the money, label on the right. Let's go, let's go, let's go. Boom. Okay, so I'm in the money there. And again, my option is for that particular date, the 21st. So I got, a little bit of time on that. And it's not far to get there, right? It's a pretty decent side. And of course, I'll be able to step into my position anytime we get over there. So within a week or two, if this doesn't start to move, like I said, I'm assuming there's some theta burn. So I'm going to put in like half the position today. And then tomorrow or the next day, I'll start to build the other half of the position. If Apple starts to collapse through the bull side of the market, I'll just close everything out. All right, so that's how I do that. I have these right here. I have Friday monthly expiration Apple calls going forward. And I think I do want to do like 15. I'll put them right there. Okay. So I actually do want to have a heavy position in Apple. Let me pick a different thing to day trade on. So that's about $4,500 invested on that. Let me go ahead and find, I want to get Rocket Scooter and pull out a couple more things. See if I can't find any hedge plays either. Apple is looking pretty solid. And let me make sure I got that on my watch list over here. Okay, we're good. Let me see NVIDIA because I know I'm a huge NVIDIA fanboy. Ooh, NVIDIA's monthly bull structure looking really sexy there. Let me look at a bigger chart. NVIDIA. I don't know. Ideally, if we get a nice little market collapse, I might want to save some buying power just to buffer with some puts. If some things do move. Microsoft is looking super hot today too. But not above monthly hedge. So bull long down, we were talking about earlier, somebody said, give me a liquidity map. We'll talk about it, right? Go ahead and look at this one. Okay. Now let's see what I can do just to see if I want to find anything new. What about smaller hype names like Pete Finger? Wait, what? Oh, that's funny. We just go with naked calls or vertical. Just naked calls. This is I'm looking for a directional breakout. Do I want to sell a vertical spread? I want to sell calls to pay for the calls I bought. I don't like to. If my belief that a breakout is very possible, like a really rapid breakout, I don't want to sell a spread because I definitely want the market to stay flat when I sell a spread. That way the theta burn on the breakout that I'm going to get, the cost, the long side of the calls, is going to move higher very rapidly, and my theta burn is buffered by the ones I sold. If I think the market's going to break out really quick, I will just naked call. Right? Because it's a waste of money to sell the calls and you're not really going to capture any theta because the market's not going to stay put. So if we have some volatility, Market's going to stay put, I think, but if volatility is in decay, we're going to be directional very rapidly. So I'll just naked trade it, and I'll just use a stop loss or get out of the trade if it goes with me, right, or goes against me. So the idea is that trading a spread, you're going to sell expensive calls, or you're going to sell calls out of the money to buy calls near the money. An example on Microsoft, I can actually engage in a spread right now. It'd be a great idea. Is that I want to buy calls just in case we break out at 250, and I just want to be in the money as we go, right? But Microsoft is likely going to chop in the middle, so anytime it's going to chop, selling calls is very beneficial because it starts to pay for those calls you bought as market goes nowhere. So I like to do spreads when markets are going to go nowhere on the chance that we kind of break out when it doesn't look like it's going to. So the example with Apple looks like it's going to break out. You know, all signs are positive on Apple, so I want to just basically get in on the run. As far as Microsoft, one of the ideas here is I can sell puts down here. And if the market goes up, I'm just going to lose that premium, and then I buy calls on that side as well. So basically, if I can do either one. Selling puts, right, means that you're betting the market doesn't go down. So selling puts would bet on the flat market. Buying calls will bet on the breakout. If I buy calls, I can actually sell calls to pay for it. So if we don't break through this and market collapses out, then that spread would be a very good trade. Because I'm just waiting for the market to spontaneously break out. And if it doesn't, well, I have a credit spread. So I made money anyways if both of those options expire. The sold calls expire in my favor, the bought calls expire out of my favor. I could plan that to be a premium just in case the market goes nowhere. I can still structure that trade to make me money. So ideally, is like with Microsoft, a vertical spread would be much better than a straight out breakout, right? Because it doesn't look like it wants to break out. It's still very much bear structure, right? So where would I buy those calls, right? I'd want the market to be a little bit lower, and signs that things could come down, resilience is less than 0. It's a pretty good sign that the market could come here. If market dips to there, like right now, it would be a good time for me to sell out of the money calls in Microsoft. And then as soon as we dip, I can buy those 250s, and that's a good way to structure that trade. So ideally, when markets are moving up, you want to be on the sell side. When markets are moving down, you want to leg into the buy side. Cool. Any questions you guys have about that? Just chilling. Grab me some calls. I'm gonna see what the S&P is doing really quick in QQQ. Just before we call it a day, go to our Discord really quick. Rocksky, if you've not been there, go there. Check it out. Huge free Discord. Platform's free to try for a week. We are literally rocketing out the door. Pun intended, but seriously though. We love you guys. We'll be all checking out. Check out our website. Everything that we have going here. Maybe I'll chill here with you guys for another hour. What do y'all think? Position sizing? Yeah, absolutely. So when it comes down to a particular trade that I like to do, pick something. Do you want to do options? Do you want to do stocks? Do you want to do futures? I trade everything. So my risk management style is different for every single thing I trade. What would you like to know? Crank it up. You're up a 20% gain, dude. Nice one. Nice one. Yeah. So this idea right here with this downside allows me to think about how I want to buffer my. So if I'm long Microsoft or long Apple or something, right? What I can do is I can, if we start to lose SPY, I can very quickly just short some SPY futures to get myself some buffering on that loss to cut into that trade. I've got a whole month for this guy to play out. That's on the 21st of this month. So I've got, or not whole month, like I've got 11 trading days on this one until it expires. So I got plenty of time for us to go up just a little bit of a notch. In options, essentially what you can do with options is a good rule of thumb. And I'm gonna, again, you decide your own rule of thumb. So for me, never let one naked options trade kill 20% of your account. Like if I just put in whatever, 15 times this $4,500, That's way, way, way less. If it goes all belly up, it's a fraction of my account, right? So as an all or nothing trade, you know, you guys are trading small accounts, medium accounts, you got $5,000 in your account. Don't let your buying power go any more than $1,000 on any one trade, or any one direction. So like buying 5 different stocks in the same direction is not necessarily good risk management. I would, if I, an example, want to make a trade, 20% is a good rule of thumb on options because, you know, options decay little by little. So you get plenty of days to like not lose all your trades. So like if you go in there with futures, you can lose 20% of your account in like 30 minutes. So with options, if you limit the maximum loss of your trade in a direction, for instance, to 20%, you know, and it trades a week out, you might lose 2 to 3% a day, which is matching it with stocks. Stocks are going to be looking for 2 to 3% a day. So just imagine you bought SPY or Apple straight up, you're going to be up or down 2 or 3%. That's healthy investing. Day traders making 50, 100, 200% a day on options is phony baloney. You don't want to trade like that. You're not trying to make big lottos every single day. Ultimately, that'll kill your account. So in a naked trade, I like to invest less than 20% maximum on any one trade. Like if I'm certain, so I get plenty of time to maneuver. I get 80% of my account to hedge. I can go in and buy puts against the calls. I go in there and I can sell covered calls, sell covered puts. I can do all kind of stuff with the extra money. And then you get maneuverability. So the number one rule of risk management when all kinds of trades is you do not snuff out your maneuverability on your trade, right? Don't make it to where you can't do anything and you're stuck with your fingers crossed, okay? Right? So never be in a situation where all half of your buying power is eaten up on a positional direction or bias. Let me say, if your bias is market's flat and you're just going to sell calls or puts to bet on a flat market, don't use more than half of your account to go all in and do that. Save at least half of your account. Again, that's even maximum. You shouldn't even be close to half. But if you're like a YOLO gambler, just remember as a rule of thumb, you want to at least save more than half. I'd say 80% or more of your account to maneuver yourself away from a loss instead of just taking a loss and stopping. So don't go in there and YOLO gamble one trade. Even if you're like, hey, market's going to go up, let me diversify. Let me buy Apple and Amazon and Facebook. You're not really diversifying, okay? Those stocks are all going to go together. If you go in and buy like Apple, JP Morgan, GE, ConocoPhillips, Disney, okay, now you're diversifying, but you're still betting all in the up direction in a bunch of stocks that are all going to move probably with the index, right? So to me, true diversification is not just diversifying sectors, but diversifying your risk. So the idea is if you're long biased, you need enough money to snuff out a losing trade over the course of time. So if I'm going to hold this till the 21st, I got what, $4,500 of buying power gone for those 3 weeks. So in the net or the 2 weeks in a day. So for the next 2 weeks in a day, I have less buying power to maneuver. I have to keep that in mind when I make my other trades. So now, if you're in an options trade for just a speculative day trade, like a 0 day or that week, don't lose more than 20% on the trade. So if I put in like, you know, $1,000 on some 0 day YOLO lottos and I'm looking for like a 200% rip on $1,000, I either have to accept the fact that I can lose that whole $1,000, and that whole $1,000 is what, 1% of your account, 0.5% of your account, then okay, that might be worth it, right? But if that $1,000 is like half your account, don't be YOLO 0 daying half your account. The idea is that if any one specific trade that's a 0 day, you might want to all or nothing it, but make sure the all loss of that day is balancing the risk reward you want to gain. You want to gain 1,000. You put in $1,000. You want to make 2 and lose 1,000. That's a 2-to-1 trade. You may like that, but make sure you lose 1,000 doesn't blow you up or you know, nuke out a huge portion of your account. Another in a swing trade, if my swing trade loses 20%, I'm usually going to cut it in general. So you know, 20%, 260, 1/5. Hold on, the toe guys here. Hold on. All right, I gotta get the Maserati repaired. It's broken. or flat tire. But 20%, right? If this goes down to $2, I'll probably just clip the trade, right? And you know, at $2, we're talking, you know, it's a $1,000 loss on 45. So I'm not losing, but like a quarter of the position. So it's fine, right? So 20% on options trade, futures trade. I don't like to. Actually, let me go out there because the guy's here. I'll come back and talk to you guys about it in a minute. Strike was based on monthly map, and I'll actually talk to you guys about that in a minute. I'll be right back in like 5 minutes. All right, I'm back. Okay. Let's go see what's going on. And oh, wait, hold on. Matt figured out the block. Oh, because it was covered by my camera. Oh, you know what? I need to put my camera somewhere that won't be. You guys make a good point. I'm like covering up my head on. Okay, yeah. Where should I put my camera then? How about here? Around the edge of the platform. That's cool. Yeah, I was. See, this is like, for you know, first day streaming. You know what I'm saying? First week streaming. Little nuances. We got to clear those guys out of the way. How about this? Kaboom, kaboom. All right. Well, that'll cover up the scanner. Put that up here somewhere. Yo, what's up, Press J? How you been, man? Okay, so that'll cover up the scanner, though. Or I can just put myself over here. You know what? I'll put myself right here. Whatever. Figure it out. Do I still look sexy from this angle? Hey, what's up, Joel? How you doing, man? Okay. Run a scanner really quick and see how that looks. That's not too terrible. Yes. Okay. God, I do like literally look like I just crawled out of bed. Let me get look at my hair, some zhuzh. Let's zhuzh it up a little bit. There we go. I literally look like I just crawled out of bed, which is true. All right. Platform looks great. Thanks, man. Appreciate it. Yeah, right. You're from the olden days. You get to see us before we're making the platform. Platform is out. It's been one hell of a ride, right? And you guys feel free. By the way, okay, today we're gonna do this thing again. For our launch special, right? There's a half price for life monthly discount. We have discount for lifetime and everything. So what we're doing is like building our client base. So you guys can actually join Rocket Scooter and lock in half price for life forever every month. Go to our Discord, send me a message. I will give you that code. It's practically $100, and that's it. Like a month for the platform, for the data feeds, for everything, for the education, for the access to all the stuff, all the tools, all the whatever. Yeah, $100. There are trade room Discords that cost like $500. So you get real-time options, data feed, stock data feed, all that stuff, and all the enhancements platform come to you for free. So go to Discord, send me a message. We'll get you in. Spy. Okay, how did I do those walls? So let me pull up Apple really quick. This is a super cool trick. Okay, so when you're doing your target on the upside, right? So what I'll do is I'm going to go to the functions. I'm going to click single date, and I'm going to have Apple. As we are pushing into like 47 and higher, you see right here, I'm looking at the first put wall as resistance for that date. So ideally, as we're getting like that bull pressure that pushes higher and higher and higher, there's that bear resistance that's right there. And I always take the edge of that date that I'm trying to trade to, which is the 21st. 21st. I'm trading the bull side up until that bear resistance, and then I'll be at the money there. So 150 was why I choose that. Pretty simple. Looks like my trade's already pushing. This is nice. There's some other stocks that looked pretty good. JP's looking hella good. JP was one of my big watch list plays the other day. So resilience is pushing higher. I think the stocks like banking are going to be one of the bigger, I guess, sensitivities. Should have grabbed that at monthly though. So what we're gonna do, let's pick some short ups and short ups on the scanner and find ones that are right at monthly hedge pressure, which is here. GE, about 1% away. So things on my watch list that I can look for would be a 66 buy at GE. Let me keep that on my watch list. I do like GE a lot. Microsoft looking hella good. I don't know why I'm like sitting and sleeping on Microsoft. I like it. Let's do the same thing over here. Oh, that's why, because of monthly. Okay, so Microsoft single date, same thing, upward target. There is nothing on single date. Okay, let's back up the map 1 week. Let's do what the 14th looks like and see if I get anything better. Microsoft all bullish on monthly side. That's looking hella good. Okay, what about the 7th? I'm just quickly putting out a map. So there's no resistances to the upside on Microsoft. That's really lovely. I like that. Let's skip to the next monthly and go out to 20. Yeah, so like if you can see, right, there's really not a lot of information on there being any kind of resistances here. But 255, at least on the daily chart today. Manual. No, nothing. Not really nothing. Okay. Monthly resilience greater than 0. Resilience greater than 0. So this is a very high probability of a monthly hedge break. I do like this, especially pushing forward. Let me see if I can't get some Microsoft. The thing is that it's really hard for me to pinpoint. And it's also kind of like doubling down because Apple is a similar trade in this environment. I think they both are going to have different sales figures going into earnings. We have to make sure that we don't want to be in a position going to earnings. So I'm going to dump these things as soon as I can. Pop this out, do analysis really quick. I can't wait till like freaking monthly maps are very much like automated. That would be super, super duper sexy. Then my arm is like magically cut off from here. Ugh, where'd my arm go? Do a quickie map for here. 235 on monthlies. Okay. Make sure you guys like the stream, subscribe to the stream, leave comments below, right? Normal streamer stuff that we can come in and you know, beat that algo. 225. All these tricks will teach you. So you guys join the program, check it out. We'll teach you how to do all this stuff that I'm doing. YouTube will be less instructional and more like just kind of demonstration. So instead of going to like long-winded explanations of like why I'm doing what I'm doing, you guys are welcome to join because we're going to have our own streams or we'll talk about that stuff privately to the members and such. So 235 a week prior. $230. And then 242 and 240. Okay. The greatest trading trick I'll ever tell you. This is something I want you guys to write this down, okay? Because it took me almost 10 years to figure this out, and as soon as I figured this out, things became a freaking cinch. Okay, you want me to teach you the best trick there is ever in trading? When you highlight something in Thinkorswim and you press spacebar, it makes a copy of it. It took me 10 years to learn that. So many seconds of my life have been wasted right-clicking this thing, duplicating drawing. So make sure you come in here and you learn. If you hit spacebar, make you a copy, and then you just drag it around. Like literally, it's the best trading trick ever in the history of trading. Don't forget it. Okay. So Microsoft very clearly has a little bit of dip potential down in here. I like the way that looks. Huge if true. Yeah, bro, it's true. I promise. And it's totally true. Totes. So inside of here, and let me just really quickly, MHP is 247.5. And let's go ahead and I haven't bought Microsoft, pulled the trigger yet. Like I said, I'm going to be really smart going into tomorrow. Remember, we have non-farms coming out. So the market's going to likely... hopefully, what I'm expecting the market to do is dip on bad news and rip following either the next day or that day itself. Are we sure that's 247.5? Oh, no, that's not right. 250. Okay, so as you see right now, Microsoft is still pressing in bear structure. Not necessarily super bullish yet or in the breaky outside. Now, we are on the bull side of positioning, but all that hedging is getting that resistance on monthly hedge, which is exactly what that map shows is a BLD. Right, so I'm not eager to pull the trigger just yet. BLDs have that resistance against monthly. Now, the breakout off of monthly is huge on Microsoft. So while I am looking at like a 250 run, let me go ahead and show that we have this. This is all the Jackson Hole stuff. Let me go ahead and try to find some other resistances that aren't options related, right? See, I didn't pull the trigger on Microsoft just yet. Let's go all the way back and let's start pinpointing some of these anchor points and red lines and stuff. So right here, Microsoft. Put that there. This is a trick called red lines, illiquidity points. You'll have illiquidity pivots, sorry. These guys here, let's just kind of mark some really quick. I get some of these tricks here. I'm just going to quickly do this and I'll come through and edit them later. That's dead. Spacebar trick, right? Look at that hack. Life hacks, guys. Life hacks. Okay, last one, about 242. So above there, 249, we're already trading there. Let me find the ones that are important on any upside break. That'll take more than a month to get there, I'm sure, until earnings, especially, and I know earnings coming out a little bit later. Ugh. Okay, so let me go ahead and mark some of these areas of interest. This is our impact. We already are at the impact there. Okay, so that's good. All right, so obviously this retracement target I marked there, that's the target right now. do some of those other positions I'm looking for. So as far as retracing that halfway point on that Jackson Hole commentary day, let's go here. And you can see that a good target, at least for an out of the money YOLO gamble over the course of time, would be like, 260 and 2. If we start to lose some of that. So again, any hint that the Fed is going to not really aggressively raise rates or slightly, ease on their tightening a little bit, less hawkish commentary, yada, yada, will come from the idea that I'm going to believe that bad jobs market data and bad non-farms data are going to stimulate Wall Street to knee-jerk sell off, and then the real cover is going to come in saying, well, jobs market's a little iffy. I don't think old JP is going to be super aggressive on raising rates much faster. We're going to taper off. And the changing of rates is that trigger that Wall Street wants to see to make their bullish decisions. So a squeeze from here to there is quite a good feat. I think that 11 trading days is certainly not enough to get there, especially counting like the volatility that we've had. Highly volatile day will be here. For me to trade for that, I'd probably get 2 months on a strike. Yeah. Risk off at the moment. Look at DXY breaking out. Yeah, I agree. What is bad news considered per jobs numbers, Seth? Yeah, so my statement on that, or my little thesis on that guy, is going to be, let me pull this up, is just a general trend of a miss. So any bad news is good. Like today, bad news is good. And I said that yesterday. I had a whole video called Bad News is Good that I made. These are the jobless claims. These are first-time unemployment claims, people losing their jobs. Let me show you a cool little trick before we kind of get out of here. You see how from June till August, the market rallied? The market rallied on jobless claims getting higher. And then the market started pivoting down, jobless claims getting lower. Why is jobless claims going up, which is a worsening thing for the economy? Short covering on Wall Street. Again, you get one step ahead as a trader, right? Again, JP is like, ooh, quarter of a basis point. Okay, let's go. He's like, ooh, market's nice and stable. Jobs are good. Okay, half basis point. Driving the car, speed up. 3/4, full point. Whoa, the car's starting to shake a little bit. Maybe we're going to freeze at one point and stay there or not get higher. 3/4 of a point, I think we're right now. The last raise, and then we'll just stay there. So Wall Street will bet that he's going to stop aggressively raising rates if the job market goes up. And that is exactly what we've seen the last couple cycles. And this cycle will be no different. So yesterday I said, if we get a tick, where the number is higher than the previous actual report, especially with the forecast being lower, and it comes out higher, that's double bad. So we underestimated, which to me is going to be seen as bullish, not because people are losing their jobs. That's bearish, but that cycle takes quarters to realize. Imagine this. 10% of the workforce gets laid off. When is, other than that knee-jerk reaction, when is Apple going to realize the lack of sales? Well, that will be reported in Apple's quarterly earnings, right? So like 10% of the people lose their jobs, 10% of people buying less stuff. Everybody that sells stuff is going to be selling less stuff. Their quarterlies will report that, and Wall Street will try to price it in a little bit upfront, but you'll get those real numbers later. So people losing their jobs, yeah, slows down the economy, and Wall Street will not necessarily crash on upticks that are small. But as the uptick starts to move higher and higher and higher, you see that, and again, some of this employment is cyclical, but you'll see that Wall Street is no longer betting that the Fed is going to be super hawkish further, as the labor market is the one driving force of maintaining liquidity in the stock market. How that connection's made? You have your job, a portion of your paycheck goes in your 401k, the rest of it goes in IRA, maybe whatever. Every single job is more money going into the stock market. More money going into the stock market is more liquidity. Quantitative tightening is the Fed removing liquidity. So if they're taking out and we're putting in, markets balance. They're going to take out as much as they can without crashing the stock market, which will get people fired, and then crash the labor market, which will crash everything. And then we hit stagflation, and the Fed has to bail us out with massive amounts of money. Stagflation is a worse problem than what we had in 2009, 2010. Not going to let it happen. So my thesis that Powell's going to drive the car as fast as he can until he starts to see very, very good information that starts to imply that they're threatening the process that leads to stagflation. So Wall Street is doing the same bet. Remember, smart traders get like 2 or 3 steps ahead. The idea that we have an uptick in unemployment is the thought that why we rallied last couple of days is because the speculation on that, and I called it and I bet against it. Remember, it was a $32,000, $33,000 trade off of that call. Again, getting a smart thesis, and it was all live. So if you guys are here, you saw it, you saw it. If you weren't here, you missed it. But the thesis was when that estimate comes out as being worse, but the forecast comes out as being, you know, similar, and I'm betting that it's going to be worse or there's an uptick, then I'm betting that Wall Street shorts are going to cover their shorts, because shorts are betting on more hawkish commentary or more rate hikes that are worse. If the jobs market is coming up, Powell would be the dumbest guy in the world to continue to press with a more hawkish stance on QT. Do we all understand that philosophy? Bad news is good news in the medium term. Bad news is bad news on the yearly term. People losing their jobs is certainly not going to be good for the economy quarters out to years out. But in the short term, anybody betting on the short side, think like a hedge fund. You're trying to short the market because markets don't turn bullish until they start cutting rates. Okay, well, they're not going to cut rates if market's nice and stable. They're going to continue to drive inflation lower, or try to drive inflation lower, even though it's not really doing much. But Wall Street doesn't care either. They want to see the words cut rates or dovish commentary or whatever. That will only come if the Fed's QT starts to affect the actual economy or even stock market. The stock market will cause unemployment. And the Fed either has to hold liquidity on their backs now or hold liquidity on their backs in a 2 or 3 year period of stagflation with a crash market. I don't think the Fed wants that problem on their hands. I think the Fed is certainly okay tapering off the balance sheet at a time when the market's extremely liquid. And again, we prove that by always talking about liquidity. And liquidity is very simply seen in 2 different factors. The asset managers in the S&P futures are selling. Leveraged funds are covering. Anytime green and blue point to each other or point away from each other, market's liquid enough. Buyers and sellers are finding each other, and we're perfectly fine right here. Market's stable as hell right here. So in general, what's considered bad news per jobs number is anytime that report comes in red, as in it's a miss, or anytime the new forecast comes in that shows it's worsening. The idea is that, do you guys understand what I'm saying? If the jobs market's getting worse, I'm betting that Powell's not going to continue to drive the car faster, right? So as a short trader, the short trader would also be like, ooh, it's not going to get worse. Let me go ahead and take my profits now and get out. As a matter of fact, that proof of that exact trade is actually seen in the commitment of traders. You'll see it right here. The shorts, ever since August the 15th, have been covering their shorts, okay? And since August 15th, right here, you see you have a definitive higher and higher ticks, and now the shorts are covering. Unemployment's getting worse. You would think that shorts would start shorting harder. But as you see, at this point in time, when that confirmation is there, that unemployment, jobless claims are getting higher and higher and higher. Why are shorts covering their shorts from the 15th of August, right? Interesting, right? From here. I mean, you've made all that money betting on QT, and then now shorts are getting out of the short trade. Do we all see that? It's proof. You're not going to bet against the Fed if the job market looking bad. And JP is likely going to stop being aggressive. And his commentary always says, we're watching labor market, watching labor market. He's literally telling you his plan. Do we all understand? Big yes in chat. It's trader 2 or 3 steps ahead because Wall Street's trying to bet on what the Fed's going to do. And that's your best window, is looking at jobs. And tomorrow we have non-farms and unemployment numbers come out. Less granularity on those numbers because they come out once a month, but it still doesn't mean they're not going to be important. So we're trading into non-farm. Huge catalyst day. Be careful on your trades. So I'm not going super heavy today. Tomorrow, right in the morning, we're going to come out, and that's what we're going to see. Weekly expirations here. Non-farms come out right 8:30. Unemployment rate's going to come out same time. It's going to be a boom and a boom. Let's go ahead and see what the expectation is for September. It's a monthly data point that comes out. You can see that again. Let's kind of scroll in, and this number right here, non-farm, is actually the change number of people employed. So it's obviously positive. So more and more and more people are getting their jobs. This is the change during the previous month. So the change is getting kind of like less and less and less. So fewer people are getting new jobs and fewer jobs are being created. And we saw that in the jolts, right? So in reality, the economy is slowing down as this number is coming lower. We're not growing as fast, which is expected, right? So ideally, if this is a greater sentiment kind of indicator, if this comes out, the forecast is very low, which is expected, right? The economy is just getting slower. So the forecast of the change is going to be what? Like 50K over 300 less. If we come in, number one, if we come in and beat this massively, that could be a sign of good economic turnaround. And has enough happened this month that caused Wall Street to be bullish on that? Good data is probably, good news is probably good news. Bad news is probably good news for the short term too. I don't think this number is going to do anything other than probably drop the market lower. And then it's going to be a dip for me to buy. I think that what's going to happen is if non-farms are great and we rally, it might rally and then turn around and sell. Ideally, I am looking for hopefully a bad number that's going to indicate, again, further Fed activity of tightening, or sorry, about being less hawkish. We all follow? Makes sense. So the idea is that that's how I look at it. With learning how to use the platform, is that accessible after signing up? Yeah, ProStage. Example, after you sign up, you get access to it. We have training, videos, all kind of stuff that you can use. Trust me. You will get a full tutorial, everything. I think that non-farm are going to be very sensitive to that number that comes out. VIX is starting to creep a little bit higher, so let me go ahead and take a stab. I'm glad I didn't touch Microsoft yet. My trade's playing a little bit of drawdown. That's okay. Not much. I didn't put much on the table. 500 bucks. Go watch the recap of yesterday. It was like a $2,800 trade I had yesterday, which is pretty good. Just some futures. So it looks like my car is being taken. We good there. All right. All right. I'm gonna call it a day, you guys. I'll fill y'all in later. Come in a little bit towards the end of the day. We'll talk about the remainder of the trades. Go in the Discord, continue the commentary there. All of our traders are there. We have other people that are streaming. We'll make sure we get you guys in front of whoever else is there. A lot of people just chit-chatting about the platform or learning about what we do. Click this link right here below. Make sure you like the stream. Even if you hate it, just like it, because, you know, help the algorithm out a little bit. It's good to see you guys. We love having y'all here. Today, VIX is running a hedge pressure. Keep an eyeball on that. Watch out for the irrational market on the S&P. Let's put this front and center back on NASDAQ here. Actually, let me do this really quick. I don't want to lose this monthly map. That guy, let's duplicate this. Let's make this a 1 chart instead of a 4 chart. Put you back at NASDAQ, buddy. Ooh. And so I'm about to build like the world's best trading computer, by the way. Nothing better than what I'm about to put on the table. It's all state-of-the-art everything. It's going to be 2 computers in 1 box, a streaming computer and a trading computer. It's all next generation everything, video cards, chips, RAM, DDR5 RAM. I've got 2 brand new motherboards, a new chipset for the new Intel chips, 13th gen. I'm gonna do a computer build video. It's gonna be a dual PC build, so I'm gonna have I have a special power supply that powers 2 motherboards at once. So it's gonna be 1 box, custom water cool system. It's gonna be really dope. It's gonna be a while to build this thing, probably a couple days, but I'm also gonna do a build video, so I'm really excited about that. All right, but yeah, we are pushing irrational on S&P. Ugh, don't like it. VIX is ticking up a little bit. Ugh, don't like that either. Ooh, boy, how do I want to do this? The dip I want to grab? No, I don't want to grab this dip on the S&P. Let me see if any of my stocks are looking okay here. JP is selling pretty hard. I did like the prospect of getting JP at a lower entry point. Perfect. Okay. Monthly res is teetering on the edge. Let me see if I can't do that. I do want to put a little spot on JP. I do want to slightly diversify a little bit more. Let's pull up JP again. I want to do something for monthlies. Let's pull this in. I do like the fact that we've dipped below. Let me get my strikes really quick. Monthly on JP, what do we have? 102. Let's do single date. Come on. We have all bear walls up until the edge. We don't bet that we lose bear territory. 120s from 108. That might be too bad. That's a little bit of a stretch from here. Let me push out 1 month beyond October. Or 1 week below October. Let's do some 120s. They're super dirt cheap, so let me copy those. I'm going to do the 28th JP Morgan. I'm going to bet that we stay on hedge pressure as long as resilience on hedge pressure stays good. Let me pop this guy in here. And let me, my bigger Dom here. Let me put this here. That position here. I think you're slow. You've always been slow, and you are still slow right now. I love you, but I hate you so much. Okay. So this JP's front and center here. There's a really big spread on these options. They're really for all the money. Let me see what it's doing. Let me see on any bounce point down here. On daily chart, where's the walls today? $120 is kind of a stretch on that. So let me see. I'm going to give it a lot of time and just kind of, I don't want to lose a lot of theta. Let me just look at a longer period chart here. Yeah, that's looking grody. Okay. Oh, we do have a gap fill down below. Okay, let's go. Let's take a look at this. Yeah, so the whole reason I have a stream computer is that I'm not using my encoder, which is my streaming software, to doing the processing. So I'm not going to have any more like thinkorswim glitches. I'm going to have like a super fast computer for trading, a super fast computer for streaming. And they're going to be different computers, which is going to be great. Do we fill that gap or do we keep that gap open? Let's check resilience. Is it going to fill? I can do a starter position here. I do, like I said, I want to bet that the market stays monthly resilience positive and bull structure is maintained. Okay. 62 cents. I went and grabbed them. They're 120s. And let me go ahead and do that monthly map on JP really quick. Just to take a look at it. Put the old Rocket Scooter Classic up on the right side. Let's do a quickie monthly map. Again, like I'm just saying, I'm betting on the market being slightly good. We have earnings coming through. I hate being long into earnings. I want to get further out so I can get them for cheap so I can get a big run if I do. But I definitely want to try to liquidate them. If this is either going to move today or tomorrow or the next day, I will close these out if it doesn't. So let's do monthly map, monthly 21st. Let's actually do Friday 1st. 42 and 40. Let's make sure we put in the right ticker there. That'll help. 110 and 111, so that's good. So 111 is that little breakout range for Friday. Boom. Yeah, so monthly maps can be huge for the platform, and I have to do this manually every time. Can be quicker on my decisions. It's these two next month. 108.5, good. So on Friday, 108.5 is that lower end, and like we were trading at that lower end right now, which is good. So it's like if we get, as long as we get through this week, we're on the bull side, which is what I was doing, at least hoping to see. So that's good. I'm putting that 107 there. 21st, okay. Good deal. 120 and 155. Oh, here we go. 110 and 111. There's a whole different break here. 11 and 12. Yeah, I'll be up here. 15 is that resistance. Okay. So it's like I have, what did I pick? 120s? Yeah. 120 would be quite a run. That's obviously based on the strike here. But I don't want to get strike. I definitely want to strike in the money. I just want to get to the bull side, take some profit and call it out. I just want to get some cheap ones. That's what I want to do on that, and get some momentum in case we bounce. So bull side would be great from here to 115. So traditionally I would have picked a 115 strike just to be consistent with my system, but I did grab 120s just to come through and fill in the gap right there on that particular day. So they probably won't strike in the money on the date I picked, but I'm going to get the run anyways if it runs 1 or 2 days, or I'll close it out. They always fill at some point, but I think so right now, probably in 2023. Yeah. All right, I'm going to call it a day, you guys. We'll see y'all tomorrow. Good luck. Safe trading. We love you. Have a good day. Come to the Discord. We'll chat with y'all later. Beyond death. Don't forget, sign up for the free trial. Rocket Scooter. Go for it. RocketScooter.com. Check it out. Link is going to drop in chat. Free trial. If you're signed up for the free trial, give me a message right now. I'll walk you guys through some of the stuff. That's it. We love y'all.